Hello investors and future investors, welcome to the channel. For today's video, I'm going to show you how to grow an options portfolio from scratch. After watching this video in its entirety, you should be able to go ahead and do these option strategies. Now, if you're new to options trading or you're just trying to use options in order to make some additional income to help supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to show you how to grow an options portfolio, whether you have a small account, a big account, or whether today is your first day of options trading. I'm going to show you how to go ahead and get started. Now, I'm going to show you how to get started if you already own stocks in your portfolio. I'm also going to show you how to get started if you have no stocks in your portfolio. So today, and as per usual, I'm going to go ahead and give you a detailed walkthrough. Not only are you going to be able to follow along, but if you do wish, you could go ahead and practice these option strategies in your portfolio. Now, you guys know we like to go ahead and get down and dirty with options, so let's go ahead and do that. For the first part of this video, I'm going to show you what to do if you already have shares of any stock in your portfolio. But for the video today, we're going to be using hims and hers, and that ticker is going to be HIMS. So let's go ahead down to trade hims options down to the bottom. Now, here you have what's known as the option chain, and we're going to use the option chain in order to go ahead and do these option strategies. Now, before I go ahead and get into these option strategies, I always have two requirements for my viewers and also my subscribers. The first requirement is always going to be make sure to always do your own due diligence before entering any options trade, because what might work for my portfolio may not work for your portfolio. The second requirement is that always make sure you have an exit strategy before entering a trade. That way, if the trade do decide to go against you, then you know how to get out of the trade. Now, the reason why I decided to make this particular video is that because most of you guys do not know, but I do prepare taxes. Now, most of my clients come to me and they have millions of dollars, and most of these millions of dollars are in stocks. So one customer portfolio would probably have 100 shares of Amazon, 50 shares of Google, or whatever. These people keep dollar cost averaging into these stocks, and they've accumulated lots of stocks, and they're just sitting there in the portfolio. So if you do have these stocks in your portfolio, why not? Why not go ahead and make some cash flow from it? Hence this video. So let's say you do have HIMS in your portfolio. You have been DCAing into HIMS, and if you don't know what DCA means, that just means dollar cost average. Dollar cost average means that you purchase the stock on a consistent basis regularly in order for you to build up a certain amount in your portfolio, whatever amount you decide you want to do. So for instance, if you are trading with a small account portfolio, you can go ahead and set this up right here in Robinhood. So you could go ahead and buy HIMS on a weekly basis and buy $10 worth of HIMS until you get to 100 shares. Okay, so assuming you have 100 shares of HIMS in your portfolio, because you must be able to have 100 shares or more in your portfolio before you get into options trading. So we are on the assumption you have DCA into HIMS and you do have 100 shares. So here's what you're going to do. We're going to go ahead now to sell. We're going to go ahead to call, and now we're going to go ahead and choose our expiration date. The expiration date I will be using is going to be September 5th, and that gives us 29 days to expiration. The reason I'm going to be choosing 29 days is because we're going to be doing what's known as monthly expiration date. The other reason why I want to use monthly expiration date is that most people that do DCA into stocks, they don't have time to keep monitoring the stock market. So it's much easier for them if they go ahead and just do one trade per month and just set it and just forget it. Hence, we're going to be doing monthlies. So now with your sell and with your call and your monthly expiration date, you're going to go ahead and you're going to choose your strike price. In this instance, you're going to go ahead and choose a strike price above the current share price. And if you are new to options, you could go ahead and start with this particular criteria. That criteria is going to be a chance of profit. The chance of profit that I use personally is going to be an 80% chance of profit. If you guys want to keep the shares in your portfolio, don't worry, I'm going to show you how to do that as well. So if you are new to options or you are interested in making consistent cash flow, then I would suggest that you go ahead and choose a chance of profit of around the 80% mark. Now, the strike price that corresponds with this 80% chance of profit is going to be the $59 strike price. So we're going to go ahead and select that. With an 80% chance of profit, that tells you there's an 80% chance that this trade can go in your favor. But also, on the reverse of that, there's also a 20% chance that this trade goes against you. So hence, I use an 80% chance because I'm good with having a 20% chance of it going against me. Now, with your strike price of $59, a very high chance of profitability of 80%, you're going to get paid. The amount of money you're going to get paid is going to be $1.85 in the options world. However, in the real world, this is going to be $185. And that's simply because each option contract contains 100 shares. So what you do, you simply multiply your $1.85 by 100 shares, and that's going to give you $185. So you don't have to do anything different. You don't have to buy anything. You already own shares in your portfolio. Whether those shares are Google, Amazon that you have accumulated over the years, you don't have to do anything. All you need to do is just go ahead and use options in order to generate some income while those shares that you took years to accumulate stays in your portfolio. So let's go ahead. We're going to select this $59 strike price. Now, this particular option strategy is what's known as the covered call option strategy. The covered call option strategy is perfect for those of you out there that like to DCA into stocks. Now, you can go ahead and DCA into stocks and you're going to wait until the share price appreciates. That's how you're going to make the majority of your money. This may take 20, this may take 40 years. What I am suggesting, why not try to make some extra cash while you're waiting for that to materialize? So this option strategy you're going to use with the stocks that's already in your portfolio is going to be known as the covered call option strategy. The covered call option strategy is an income generating option strategy, meaning whenever you do it, you're going to get some kind of income, and that's what creates cash flow. Now, in this case, I just showed you the amount of money you're going to receive is going to be $185. The one important criteria in order for you to do the covered call option strategy is that you must own 100 shares or more of the stock. Hence, if you do have portfolios with a couple hundred shares of any stock, feel free to go ahead and practice this option strategy. Now, let me go ahead and show you how this trade could go, and then I'm going to show you if you do not want to lose your stocks that you spend years to accumulate, what you can do in order to not make sure that happens. So, come expiration date of September 5th, if this share price right here of 51.40 happens to stay below the $59 strike price that we chose, then you're going to get to keep your $185. This money is always going to be yours to keep no matter how the trade goes. And then the 100 shares that you had in your portfolio that was used as collateral, that then gets released back to you. And then you could go ahead and do this option strategy the following month to generate some additional cash flow. Hence, this option strategy is perfect for anyone that's trying to make consistent cash flow in order to get extra money to supplement their regular 9 to 5. Now, the other way this trade could go, once again, if at expiration date, this share price here happens to blow past the 59 strike price that we chose, then once again, you're going to keep your $185. That cash flow is always going to be yours, but now you're going to end up losing the 100 shares that you took years to accumulate. However, you don't have to worry because this is a win-win option strategy. Here's how you're going to win. In addition to you keeping your premium of $185, now Robinhood or whichever brokerage you're going to be using is going to be forced to sell the 100 shares that you spend years to accumulate. Now, they're going to sell those shares. However, they're going to sell the shares at the strike price you chose. So let's just say you bought 100 shares at $51. Now you're going to be assigned your shares, meaning you're going to lose your shares because it's going to be sold to whoever bought the option, but they're going to be buying it at $59 per share. So now, in addition to your credit that you receive, you're going to be making some additional money, which is known as your capital appreciation. The additional money you're going to be making is going to be the $59 right here. You're going to subtract that. You're going to subtract the $51 here, and that's going to give you an $8 difference. You multiply the $8 by 100 because each option contract is 100 and you are using 100 shares as collateral. That's going to give you $800. So within the span of 30 days, you're going to be able to make almost $1,000, which is going to be your $8 of your capital appreciation plus the amount of premium you received. So I'm just putting this out there. If you guys have lots of stocks that you have been accumulating in your portfolio for years, this is one option strategy you could use instead of just having the stock sitting there waiting for capital appreciation. Now, I know there are some of you that do not want to lose your stock. You have spent years to accumulate these stocks. You want to leave it there in order to pass down to your generation or whatever the case. If that being the case, then this is a slight tweak that can be made. What you can do is that you can go ahead and change your chance of profit here. What that's going to do is that's going to reduce the risk of you being assigned. So let's go ahead and I'm going to choose a different price right now. So let's go even higher. So what I'm going to do, I'm going to change my chance of profit. Now, I'm going to go ahead and choose a chance of profit of 93.63, let's say 94%. So the first one we did was an 80% chance. This one is going to be a 94% chance. So that also means there's only a 6% chance that you're going to lose this trade. So the odds have increased in your favor drastically. Now, the strike price that coincides with this is going to be $72 strike price. Now, in order for you to lose this trade, the share price right now has to go from $51 to $72 within 30 days. Like I said, you have increased the odds in your favor. Now, the only downside to this is that although your shares are more safe now, so to speak, the amount of premium you're going to receive is going to be drastically reduced. Initially, with an 80% chance of profit, you were going to get $185. Because you have now increased the chance of you winning the trade, your premium is going to be dropped down to $51. Now, if you are someone that's been DCA'd and you do not want to lose your shares that you spent years accumulating, I do not think you're going to have an issue with getting just $50 on a monthly basis. This $50 right here should only be extra money for you because the whole point is that you want to accumulate shares in order to capitalize on stock appreciation, which you could probably use for your retirement or to pass down to your generations. So investors and future investors and those older investors out there, this is one option strategy that you can consider if you're just sitting on a portfolio with lots of stocks. I see you guys come to my office several times with millions of dollars in Google's, Amazon, all that kind of thing. That is all good and well, but why not just try to make some extra income? Okay, now what we're going to do, you guys know I specialize in helping small accounts portfolio grow. So what we're going to do now, I'm going to show you a different option strategy that can be used for those of you with a small account portfolio that have not had the fortitude or the time to go ahead and accumulate shares over time. So all you have in your portfolio is just strictly cash. So I'm going to go ahead and show you what to do with it. So let's go ahead. We're going to change the stock and we're going to change the stock to BBA. So let's go BBAI, and that's going to be Big Bear AI. Now, I'm going to let you guys know one more time. Always make sure to do your own due diligence before investing. Now, Big Bear AI is a very speculative stock. The reason I'm using it for this video is because the premiums are absolutely juicy. And remember, these videos are for education and entertainment purposes only. Okay, so Big Bear AI. For those of you with a small account, and for those of you that has only cash in your account and you have never done options before, this is what you do. With the cash sitting in your account, we're going to assume that you have accumulated $1,000 either by working for McDonald's, you work for Sweetgreen, you work for wherever, but now you've got that money in your portfolio and you want to trade options in order to get some extra income. This is what you're going to go ahead and do. Once again, we're going to go to trade BBAI options down to the bottom and open up our option chain once again. In this particular instance, what you want to do, since you only have cash in your portfolio, you're going to go to sell, you're going to go to put, and then now we're going to go ahead and choose the expiration date. The expiration date we're going to be choosing is going to be, let's go to August 29th, which gives us 22 days to expiration. Now, feel free to choose whichever date that you want. Options is not black and white. Feel free to experiment with the different expiration dates, and that's going to show you the amount of different premiums you're going to be able to receive, and then make a decision based on your personal tolerance and your portfolio outcome. So we're going to be going with the August 29th, 22 days to expiration. Now we're going to be going ahead and choose our strike price. If you are new to options, what I highly suggest is to go with a chance of profit. A chance of profit of 75% is going to suffice. The reason for that is that this is a bullish option strategy, and the stock market usually goes up way more than it goes down. So you only need about a 75% chance of profit in order to do this option strategy. Now, your strike price that coincides with a 75% chance of profit is going to be 5.5 strike price. And this too is what's known as an income generating option strategy, meaning if you are interested in making additional income in order to get consistent cash flow, then you could go ahead and use this strategy. We're going to go ahead, we're going to click into it. And this option strategy, investors and future investors, is known as the cash secured put. The cash secured put works perfectly if you don't have any shares in your portfolio. All you're hanging on to is just cash. It also works if you are working a 9 to 5 and you're trying to build an options portfolio by getting some consistent cash flow. The amount of money you're going to receive for this trade is going to be 0.25. And as per options contract, you're going to multiply your 0.25 by 100 because each option contract contains 100 shares. So for this particular trade, the amount of income you're going to be getting is going to be $25. Now, $25 may not seem to be a lot, but look at it this way. You need to go to your regular 9 to 5 and you need to work hard from 9 to 5 with a boss on your back all the time in order to make money. You're going to be able to make this $25 in less than a minute. And when you become professional, you're going to be able to do this in less than 5 seconds. So $25 in 5 seconds, I think that's a win right there. Now, this is how this option strategy goes. Come expiration date, if the share price right here of 6.68 happens to stay above the share price that we chose, which is 5.5, then you get to keep your premium here, which is the $25. That premium is always going to be yours to keep no matter what. So you're going to get to keep that. In addition to that, you're going to be able to now get your collateral back. Remember, you only have cash in your portfolio. So when you do the cash secured put, they're going to go ahead and hold on to whatever your strike price is, multiply by 100. So in this case, it's going to be 5.5 multiplied by 100, and that's going to be $550. Once the end of the trade comes, you're going to be able to get that $550 back into your portfolio, and you're going to keep your $25, and then you could go ahead and do this trade again. Hence, you'll be able to make consistent cash flow. Now, the other way this trade could go, come expiration date once again, if this share price here happens to drop below the strike price we chose of 5.5, then once again, we keep our $25. Remember, that $25 is cash flow we receive on a regular basis, and that's what's going to help us to grow our options portfolio. But now you're going to lose your $550. The reason you're going to lose your $550 is because Robinhood or any brokerage you're going to be using is now going to take that $550 and now they're going to buy 100 shares of the stock, in this case BBAI. So once again, this too is a win-win option strategy. So you do lose the trade, you do lose your $550. However, you do have 100 shares of the stock you're trading in your portfolio, and you could use that now to go ahead and do the previous strategy I showed you, which is known as a covered call, in order to generate income again. Now, these two option strategies put together, the covered call option strategy or the cash secured put, are known as the wheel option strategy. The wheel option strategy is a perfect option strategy in order to help you grow an options portfolio, and it works particularly well if you're new to options because it's quite simple. So in order for you to build your accounts portfolio, feel free to get started wherever you are at present. If you do have the shares in your portfolio already, then consider the covered call option strategy. If you only have cash in your portfolio, then you should be thinking about the cash secured put. So there you have it, investors and future investors. In order for you to go ahead and grow options portfolio from scratch and you don't know much about options, This is what you should be trying to implement in your portfolio. Remember, it's not so much about the stocks that I feature in today's video. It's mostly about the option strategies. By learning these option strategies, that's going to be able to make you consistent income. It's going to be able to make you grow your options portfolio. And most importantly, it's going to be able to give you some additional cash flow to help pay some expenses in your regular life. Now, for those of you that made it to the end of the video, you guys are the real investors and future investors. If you haven't already, now would be the perfect time in order for you to go ahead and like the video, subscribe to the channel. Here's the most important thing. I do put all this free content out there in order for me to help people to make some additional income with options trading. So if you do know of anyone struggling to grow a small accounts portfolio, then the right thing to do is to go ahead and share this video with them. Let's try to help as many as we can. Now, until the next video, keep pushing your investments.